Parsing Trump's tariff talk. Let's ask Robert Conzo of the Wealth Alliance about that. And I'm Lisa Bernhard with Reuters. President Trump said that there would be 25% tariffs on goods from Canada and Mexico. What's been the market's reaction to that?
Right now, the investor reaction coming off the inaugural speech is pretty positive. And I think part of that was that speech was more of a rally cry than an inaugural address. And I think the public, or at least the market, reacted pretty favorably. So when you look at these tariffs, there's some feeling right now that maybe it's going to be a little MAGA-lite. He's going to push him out a little. What's he going to do on the EU? What's he going to do on China? And although he announced Canada and Mexico, there's a lot bigger world out there. And I think people feeling pretty strong that there'll be a little less than what he said. And that's good for the market. I will say it does add and compound the, hey, what is he going to do question. And I think that's something that the investors have been struggling with a lot.
We have seen that, right? We have seen that after the initial Trump trade, when he won the election, that the market's kind of been up and down. And as you mentioned, we're back up today at this moment. What do you think in terms of the Trump trade, though, going forward? Do you think more uncertainty now, to your point, until we wait and see how the tariffs, among other things, play out? Or what do you think?
The Trump trade or the Trump effect is nothing more than market overreaction that the market always does. So let's look at some things that happened around that time frame that were really confusing to the general investor. The Fed cuts rates 1%. The 10-year yield goes up 1%. That doesn't make a whole heck of a lot of sense. How can Fed rates go down and the yield go up? Well, bond prices change. On top of that, you saw things regarding economic data. CPI that was reported in October, CPI went down and the market went down. That doesn't make sense. Inflation goes down, market should go up. And then in December, CPI goes up and markets have one of its biggest days since Trump. So why is this going on? It's going on because the public and the Fed's putting out data points, so much of it data dependent, and the Fed is seeing the market react because the general public is seeing snippets of this and not taking it in context. So you're getting this very, very confusing reaction. And on top of that, you get analysts that predict big banks in 23 predicted the S&P up 6%. It was up 24. In 2024, they predicted market up 3%. It was up 25. So how can you blame the public for not being completely confused? Our take is a little different. I'm feeling pretty good about 2025.
How much do you think the market will be up then in 2025? What's your prediction?
I would say we feel pretty strongly about the economy from various perspectives. Unemployment, 4.2 to 4.1. There's strong unemployment. You're looking at PCE, personal consumption expenditures, around 2.5. CPI, 0.8, 2.9. Wage growth, around 4. So you have inflation here, wage growth here. That's a good thing. Jobs just came in at low 200s. That's another good thing. And lastly, the icing on the cake, one more time, earnings for the fourth quarter predicted to be around 11.7. That would be the highest quarter in 2024. Those are all very strong numbers, signaling a pretty strong economy. And let's not forget your bond portfolio is giving you great interest rates on top of that. We're feeling pretty good about 25.
What individual areas of stocks are you looking at in particular?
Well, number one, the boring 60-40, the 50-50 works pretty well when you're trying to parse out a lot of noise. That being said, there are areas of investing that look pretty good. Let's name a few. Financials, utilities, energy, and then one that's being spoken, but not so much on the investment front, infrastructure, roads, bridges, data centers, power grid. These are areas that both sides of the aisle like and present a really good investment opportunity. And that's something that we're focusing on at the Wealth Alliance. We feel pretty strong about infrastructure, and we are focusing on it heavily in 2025.